Hey everybody, it's Wednesday the 24th, and we had a little bit of a sell-off here. When we look at the daily chart, it really looks like nothing here. We are still holding above that 200-day moving average, and we have the 50-day moving average below. Now, if we were to come down to this low and undercut it, that would also undercut the 50-day moving average. Let me show you what else that would do here on a, let's look at a 130-minute time frame. So on here, I've got a 5, 10, and 20-day moving average. I've already drawn this trend line in, but that trend line, again, if we were to come down further and maybe undercut this prior low by a little bit, that would, I think, get a little bit of fear into this market, and then we would most likely trap shorts below that level. That is, close to, let's see what this number is. So, I mean, it's basically 295. And when we go back to the daily time frame, you can see that's pretty much, would undercut that 50-day moving average nicely as well. So, we're below a declining 5-day moving average. Of course, that's the orange. We are above the May VWAP. The thing is, we've known that this market was uncertain. I was thinking that we had the potential to break higher. Obviously, that didn't happen. This afternoon, or the midday video, I thought maybe the worst was behind us, but there was no evidence of that. It was just a hunch, and good thing we trade it based on evidence, not on what I think and feel at the time, because we obviously continued lower and we had a declining volume weighted average price throughout the session. So heading into tomorrow, I think we could probably expect, if we get a little bit of a bounce, that it'll be sold into, and this market will want to test this low and perhaps the trend line and 50-day moving average. Over to the NASDAQ, again on the daily time frame, the pattern is very clear. It's higher highs and higher lows. If you think that you're the smartest one that can pick the high, then that's great. So far, no one's really done it yet, except maybe a couple people yesterday and today can say that they shorted the high, because those are the highest prices we've seen so far. But the fact is, the pattern of higher highs and higher lows is still in existence. We are now below the 5-day moving average. We came down to the expected level, which is this little consolidation area. And if we were to see some deeper selling, then I think that, in this market as well, the 20-day moving average has been the important one, and perhaps we come down and test that. But again, the pattern overall is higher highs and higher lows. The Russell 2000 came down into that prior band of resistance once again, this prior resistance which had been support. And of course, we've got that 50-day moving average coming up as well. Looking over here to the 130-minute time frame, we still have this pattern here with this high, and the most recent relevant low is right here. Now we have possibly a lower high, and if we were to undercut this 132, I think uneducated short sellers would come in and say, hey, look, it broke the trend line, it broke that prior low, and then what would happen? Then you would most likely see it rally and then perhaps decline. But you don't want to be the person who shorts underneath here, because you have to ask yourself, as always, where has the market come from? You don't sell short the lower highs and lower lows. You sell short as it breaks a support before the lower low. Look to cover some into that. Basic stuff we talk about every single day on the individual stocks as well. Semiconductors closed above their 20-day moving average, which is above the rising 50 and 200-day moving average. On a 15-minute time frame, they are below a declining 5-day moving average. They're below the volume-weighted average price from the high and the low this month, and they got trapped there at the end of the day. So we're going to be looking at this market in the intermediate term as guilty till proven innocent, as long as we're really below 150.5 to 151. We're going to need to get back above that for it to be more neutral. And the daily time frame, we're probably due for a little bit deeper pullback. Maybe we come even all the way down to the 50-day moving average before we get a bounce. If that's to happen, just be prepared for it. I'm not looking to short it, not when we have the overall bigger picture still in an uptrend. As I've been saying the last 2 days, the biotechs are strong, but they're extended. They're coming down to the volume weighted average price from, pretty much the lows here. That was last Monday, actually. There's, the 135-ish area looks like the potential for support, 135, 134 and a half. We don't want to be a buyer here. If you're along this group, maybe tighten your stops. Just be aware of what your risk is. But let's wait for them to settle down, turn sideways, and then begin to move higher before we decide to get involved. As we've noted, the financials have been the worrisome group. They got up to that 200-day moving average, came down into this prior band of resistance, and found buyers, bounced once. Now, this second time, what do we see? We broke support. We closed near the lows of the day. We are in here below a declining 5, 10, and 20-day moving average. That's not a good sign. I think that in this market, kind of similar. We're right at the 50-day moving average, so some undercut of that perhaps. People will call the end of the world. It is most likely then to bounce up and then go lower if it's going to experience a greater sell-off. Get in the habit of not selling short after big drops.